Creating a budget is a crucial step towards managing your finances effectively and achieving your financial goals. In this guide, we'll explore the steps to budget your money effectively, covering everything from setting financial goals to tracking your expenses. By the end, you'll have a comprehensive understanding of how to create and maintain a budget that works for you. A budget can make it easier for you to achieve financial milestones, such as building an emergency fund or saving for a down payment on a home. While the task may seem daunting, it's not that difficult to create a budget. Plus, once you have one, the bulk of the work is done and you can make minor tweaks as your spending habits or income change. There are many websites and budgeting apps that you can use to get started, or you can create your own spreadsheet. In this video, we are talking about the best way to budget your money. So let's start the video. Setting financial goals. Before you can create a budget, it's essential to define your financial goals. These goals will guide your budgeting decisions and help you stay motivated. Financial goals can be short-term, such as saving for a new car, or long-term, such as retirement planning. They should be specific, measurable, achievable, relevant, and time-bound, smart. Take some time to reflect on your priorities and values to determine what you want to achieve with your money. Calculate your net income. The first step is to find out how much money you make each month. You'll want to calculate your net income, which is the amount of money you earn less taxes. If you receive a regular paycheck through your employer, regardless if you're part-time or full-time, the amount listed is likely your net income. Keep in mind that if you're enrolled in a health insurance plan, flexible spending account, FSA, and slash or retirement account through your employer, the money is often automatically withdrawn from your paycheck. You'll want to subtract those deductions to make sure you have a clear picture of your take-home pay. If you freelance, are self-employed, or simply don't receive a regular paycheck, you'll need to subtract taxes from your income amount. The self-employment tax rate is 15.3%, according to the IRS. You can use this Tax Act calculator to estimate how much taxes you're required to pay in a year. Then you can divide by 12 to get a monthly estimate. Label fixed and variable expenses. Once you've compiled a list of your monthly expenses, label whether they're fixed or variable. Fixed expenses are bills you can't avoid: rent, utilities, transportation, insurance, food, and debt repayment. Variable expenses tend to be more flexible: your gym membership, for instance, or how much you spend on dining out. If money was tight, you could always drop your gym membership and curtail your dining out spending, but you are likely always going to have to pay rent or your mortgage. Identifying your expenses. Next, list all your expenses, both fixed and variable. Fixed expenses include necessities like rent or mortgage payments, utilities, insurance premiums, and loan payments, while variable expenses encompass discretionary spending like groceries, dining out, entertainment, and transportation. Be thorough in identifying all your expenses to ensure that your budget is comprehensive. Determine average monthly cost for each expense. After you separate fixed and variable expenses, list how much you spend on each expense per month. You can look up your spending on bank and credit card statements. Fixed expenses are easier to list on your budget than variable expenses, since the cost is generally the same month to month. For example, debt repayment on a mortgage or auto loan will cost the same each month. But fixed utilities, such as electric and gas, and variable costs, such as dining and household goods, often fluctuate month to month, so you'll need to do some math to find the average. For these categories and anywhere your spending changes from month to month, determine the average monthly cost by looking at 3 months' worth of spending. To calculate the average amount you spend on groceries, for example, add all of your grocery spending during the past 3 months and divide by 3. If you find that the average you spend on groceries each month is $433, you may want to round up and set the spending limit to $450. Make adjustments. The last step in creating a budget is to compare your net income to your monthly expenses. If you notice that your expenses are higher than your income, you'll need to make some adjustments. For instance, let's say your expenses cost $300 more than your monthly net pay. You should review your variable expenses to find ways to cut costs in the amount of $300. This may include reevaluating how much you spend on groceries, household goods, streaming subscriptions, and other flexible costs. It's a good idea to reduce these costs and regularly make adjustments to the amount of money you spend so you can avoid debt. On the other hand, if you have more income left over after listing your expenses, you can increase certain areas of your budget. Ideally, you'd use this extra money to increase your savings, especially if you don't have an emergency fund. But you could also use the money on non-essential things like dining out or traveling. Planning for the future. In addition to short-term goals and emergencies, it's essential to plan for the future, including retirement, education, and major life events. Contribute to retirement accounts, such as 401k or IRAs, to take advantage of tax benefits and employer matching contributions. Consider opening a college savings account, such as a 529 plan, to save for your children's education. Review your insurance coverage, including health, life, disability, and property insurance, to protect against unforeseen risks. After you finish creating a budget, the next step is to stick to it. You can hold yourself accountable in a variety of ways. For starters, you can set reminders with your credit card and bank accounts when you reach a preset spending amount. You should also try tracking all of your expenses into your spreadsheet or budgeting app right after you make a purchase. Creating and sticking to a budget is essential for achieving financial stability, reducing financial stress, and reaching your financial goals. By following these steps and implementing effective budgeting techniques, you can take control of your finances, make informed decisions about your money, and work towards a secure financial future. Remember that budgeting is a dynamic process that requires diligence, discipline, and flexibility, but the rewards of financial freedom and peace of mind are well worth the effort. That's it for today's video. Make sure to like the video and subscribe to the channel for more finance content.